All right, very interesting data right there. And I mean, it makes sense. And there's also a JP Morgan note, which we were talking about earlier. So they're saying for Q3, we saw retail investors selling $1.9 billion. This is versus the $1.7 billion in the previous quarter. And it makes sense, right? After COVID, we saw those couple of years where we had just everyone making money in the markets. You shoot your shot, you're going to make some money. So I guess on the back of that, that's what JP Morgan is saying as well, that the lack of returns is probably just taken the retail investor away.
Everybody thought that they can be a fund manager. It's the latest career in town. Well, guess not.
Guess not.
All right, so let me just quickly give some more details on what the retail participants have done in the December quarter. And these are the top buys, the individual stocks that retail investors bought in the December quarter, according to JP Morgan and their analysis. Bajaj Finance, Adani Ports, Tata Elxsi, Bharti Airtel and Wipro. And Wipro, remember, has been a rank underperformer, but retail favored Wipro. The top sells for retail in the December quarter were Reliance Industries, Hindalco, Tata Steel. So metals were out of flavor for retail, and Infosys and TCS. Interesting, right? Infi and TCS, these are the two large IT companies. They've been doing well, they've been outperforming, but retail has decided to perhaps book some profits. And they've pumped in money in Wipro, which was the underperforming IT stock in the large cap universe.
Yeah, those are, of course, some of the interesting stock moves that this report talks about. It also takes into account some other factors, for instance, if you look at total market turnover, which obviously has dipped in the fourth quarter so far, and the year that's going to close out. The JPM note points out that the daily market turnover is down 27% versus the third quarter, if you look at it. And there's a 40% decline in the non-institutional portion. So it's really retail, which is now taking a backseat with respect to too much of perhaps a day trading or even, a couple of shots here and there. It also points out that SIP flows are still resilient. But other than that, the flows, retail flows coming into mutual funds, they're also cooling off a tad bit. And that could explain why there is a lesser amount of interest in the market from the retail pocket. And obviously, it's highlighting the same reason that Anuj spoke of when you are getting better returns in the fixed income market. I loved how he put it. Without any heartburn, heartache, any anxiety, you're getting 7% in a fixed deposit. Why would you bother with an asset class that's not made it so easy to make money? And I guess that's exactly what's playing out on the screens.
The only silver lining right now, at least, is that the SIP inflows have remained rock steady and have been going up. But X of that,
while the SIP inflows have remained rock steady, if you take a look at the total AUM for the industry, it's come down considerably. So there is definitely nervousness, across the board there as well. It's perhaps the only part which is holding up is the SIP.
All right, that's the interesting analysis that's come up in the December quarter and the way money has moved. Get into a break. On the other side, we'll be joined by the management of CMS Info Systems. Stay tuned.